All right, the news is this. The Dow is up 126 points. However, the rally is almost all because Boeing, which is a Dow stock, has gone straight up. Joining us now is Fox News contributor Scott Martin. I don't like the look of this market. If this is a recovery and it's based entirely on one stock in the Dow, I don't think much to it. What say you?
Yeah, that hurts a little, doesn't it, after yesterday? I'll tell you what's interesting, though, Stuart. You know, the tape was ugly yesterday for sure. You know, Dow down about 350 and change. But the reality is there were some winners. I mean, like you mentioned earlier in the show, you know, Amazon won yesterday. Facebook held in there okay. Some other tech stocks, too, didn't go down as much. So the tape really, in general, wasn't terribly bad. The headlines were bad. But that, to me, tells me that there's still some pockets of strength as an investor you can rely on here.
What are you buying?
So we're actually looking at taking a position in Facebook ahead of the earnings coming up here because I just believe those earnings are going to be...
Wait a second. You would buy Facebook now just a few hours before it reports its profits. You're taking a flyer.
I don't know if it's much of a flyer. I mean, if you look back at their earnings the last few quarters, it's been absolutely blow it. And look at the emerging market growth they're going to have. You know, Instagram now nearing 1 billion users. I think there's a lot of good numbers to come with Facebook's Q4 earnings, Stuart. And then also Microsoft, too. I mean, yes, Microsoft has kind of lost the cloud race to Amazon, but they're still prevalent in that area. So we like Microsoft here, too. We own those already, but are adding them for new clients. Target on Facebook, by the way, is 200, at which point we'll probably take some off.
What do you say to the idea that if either Microsoft or Facebook disappoints in the slightest, it affects those stocks and the overall market? There's no room for disappointment, is there?
No, there's not. And you were talking about this yesterday, and I give you props. I mean, that was really astute because you're right. I mean, there's no room for error. Now, the good news is a lot of these companies, let's face it, don't error. They don't miss. I mean, look at what Amazon's done the last few quarters, and Google for that matter. So the reality is you're right. The risk is high if they miss, but our research says they're not going to miss, they're going to hit, and therefore that's why you need to own them going into earnings.
Now, for a long time, Scott, you've said this market is going to keep on going up. There may be the occasional pause, but you're still with that. The market keeps on going up from where it is now, correct?
I believe it does. I think the earnings season that we've seen so far has been very good. The tax cuts are just now filtering their way into the market, and the fact that I think we're going to have one of the stronger economic environments in the last several years coming up in 2018. So that's good for the S&P.
Okay, Scott Martin, we hear you. Thanks for being with us. We'll see you again real soon. Thank you very much.
See ya.
Okay.